Hey, it's Michael Tiny Saw with the market autopsy video for the week ending Friday, November 16th, 2012. Let's take a look at economic reports and releases due out this coming week. 10 a.m. on Monday, we have existing home sales. We have a 3:30 a.m. European number, but it's only rated an orange here. On Tuesday, Eurogroup meetings, building permits in the U.S., housing starts, Lacker speaks at 9, and then the big one is Bernanke speaking at 12:15. Now, this past week, Bernanke's speech didn't really do much. I mean, it bounced us for a little bit. So let's see if he'll say something different on Tuesday that could actually shake the market for more than just a little bit. So Wednesday, we have the German 10-year bond auction. Unemployment claims are moved a day early. Flash manufacturing PI, revised University of Michigan consumer sentiment, crude oil inventories. On Thursday, it's a bank holiday in the U.S. because it is Thanksgiving. So there are some European numbers that are being released, the French flash manufacturing, the German flash manufacturing PMIs, the European Union Economic Summit, day one, you got a tentative Spanish 10-year bond auction. And then on Friday, the second day of the European Union Economic Summit, I don't know if it's only 2 days or it's more, whatever. And then you got the German IFO business climate at 4 o'clock in the morning, also on Friday. Now, Friday's going to be a half day. Thursday, there'll be a shadow session. The market will be open, not the stock market, but the futures market, I think, will be open for a little bit on Thanksgiving, but I avoid those days like the plague. And now Friday will be a half day. And this week, even though it is a holiday week, the way the market has been trading lately, it could still hold some nice volatility for at least the time that it's going to be open. Wednesday, usually the day before Thanksgiving in the afternoon, it starts to kind of deaden up as people like to get an early start on the holiday, beat the commute, all that stuff. It is the most traveled day of the year. So, they don't want to get log jammed up with, wherever they're going home from and, more people coming home also for the holiday. So you can expect to see volume drop off then, unless it's a real crazy day. Then they may go wire to wire. So a couple of things before we start looking at the market here a little bit deeper. Whoops, guys don't want to see all that crap, do you? So there's a couple of things going on right now that I believe need to be addressed here. The first is the conflict in the Middle East. Now, Israel is at war. And, that's something that we have to watch. But, again, I've said this before and I'll say it again. And I don't mean to sound heartless. And, so don't take it that way. I'm doing it from a total objective view. But the market doesn't seem to be influenced as much for a long period of time by things that happen outside of the United States. I mean, yeah, obviously, the Greece rattled some cages, and this conflict over in the Middle East will definitely rattle some cages, but the longer-term stickiness of it is probably not going to be that much. The second thing is the fiscal cliff, and I believe that there will be a compromise reached. I don't think either side will get everything they want, but I don't think it's going to be as bad as a lot of people are making it out to be. I think that this is again something used to scare people and to shake things up. And yeah, the market has been going down. There's no denying that. I'm not going to sit here and go, see, the market's shrugging it off. No, and the market was at multi-month lows on Friday, so. It hasn't been this low since the summertime. So, they're definitely not shaking it off. But I just think as it becomes more and more, to the end, and here we're going to go, and here we're going to go, and that's going to be it, and there's not going to be a deal made, and there's just going to be a lot of fear in the market. I think that's the time when we should be watching and get ready to pounce. I'm not in the camp that we've started a huge bear market here. We are pulling back. We are below the 200-day moving averages across the major indexes. So I cannot be bullish here anymore. The 200-day is my line in the sand. And the fact that we're below it, and you'll see it as we look at the other indexes too, Okay, that is not in any way, shape, or form bullish. However, on the weekly chart, we'll pull up the SPY for now. What is this? This is an uptrend. It's an uptrend since back here in 2011. It's still an uptrend back here. I mean, just the simplest way to read a trend is what? Higher highs and higher lows. And back down here in 2009, and since then, we've been making higher highs and higher lows. So I'm not ready to put a fork in the market right now. Okay, again, I can't be biased on the long side because we're below the 200-day, and that's where my bias flips, right? I cannot be biased short above the 200. I cannot be biased long below the 200. All right, but we did hit, now let's go into some individual index analysis. We did hit the 62% retracement of the rally off of the June lows. Okay, we did put a hammer in on Friday. We traded lower and then had a really nice reversal in the morning. And the futures closed actually at their highs. The SPY closed a little bit off their highs. So we are at key support here. Okay, but I still think we have more downside to be seen. I think we're going to see more downside. And I think the next push down, I'm going to be really stalking for a divergence, because if we get a divergence on that next push down, I think that could be a very tradable low. Right here, I'm about 65 to 70% confident that this could be a tradable low. But my first target is only back to the 200-day moving average. Okay, so it's not really that far here. I think that if we were to trade lower, again, I think that there would be a chance for a tradable low that could, possibly lead us to new highs into the first quarter of next year. I'm off I think we see new highs on the year stance. I don't think, I think there's a very small chance we see that here. I think this is too much damage done on the short term, but that doesn't mean that we can't start to crawl back, from either here or from a lower price, and try to put in the next up leg. I'm not a permabull here. Okay, I'm just looking at what I'm seeing, and a lot of people are so quick to jump on this, and they're not seeing the bigger picture. And I showed you the big picture. The big picture is the weekly chart is in an uptrend still. So what I'm looking for this week, I want to see how far they could bounce us, if this hammer is going to be for real, and if we're going to get a bounce from here, I want to see how far they could bounce us here. And if they don't, and if it's just lame, well, then I'll be looking, something like this, where they just come right back in and sell it. Well, I'm going to be looking for the next level down. For me, that next level down is this 78.6% retracement as far as the fibs go. But there's also the middle of the meat of this move in the 134s is also an area to watch, like the 134 handle. Okay, so that's something to watch too. But I think this hammer could get some buying. I'm just not, really highly confident in it. And again, I have a very, quick target on this. Okay, and I'm not, look, maybe it's the low, and maybe we rally to new highs to the end of the year, and they'll say, you'll say, Tiny, you gave up faith too soon. Okay, I'm just reading the chart here. And to me, this is definitely a nice hammer. We definitely had the little knockout here. Everybody's like, oh boy, here we go. More new lows on Friday. Oh, another down week, blah, blah, blah. And yeah, it was a down week after all, but, another crappy close. And then they reversed it. I think there could be a little bit of continuation here, but I have to respect the next resistance levels. Okay? Dow. All right, the Dow is actually at just shy of the 78.6% retracement. So that's my next support on that. The Qs. Okay, now the Qs are through this 78.6% retracement from the June low rally. Okay, so they didn't look like they closed back above them. So it looks like it closed right on them. So maybe for the week it held, but to me this kind of wash through suggests that we're going to be testing these lows before it's over. All right, and then you got the Russell also. Grab the fib on this too. I had them all set up. I don't know what the heck happened. I think the Russell also, looks like it came down here and almost tested it. Let's see how far it got. 75.92. And this is 70. Yeah, so it came a little bit shy, another 20 cents or so. But that could test that. And, of course, if it got through it, then I'd be looking for the June lows there. So to recap, before we go on to the sectors, we do have a reversal candle on Friday. I'm not highly confident. I'm better than 50%. Like I said, I'm probably 65% to 70%, more like in the 60s, that we could get a bounce. But I have a very short target, which is a very small target, which is just up to the 200 day. All right, so it could be the lows here on this pullback. I think we're going to go down again after a pause, and I'll be stalking that for divergence for a more significant low that I think will lead to new highs, at least on the S&P, into the first quarter of next year. Okay? All right, let's look at some sectors now. Semiconductors, all right, also reversal right at 350. Came a little bit shy of this low here. Look at some stocks. Clad tanker, just been getting cracked. Took out the lows there. Okay, but reversed. So maybe they could have like a fake out move here, right? If that's the case, and this was a break and then a reversal, you can look for this to, whoops, sorry about that. You can look for this to trade back up to the 20. Broadcom, looks like it's slowing down a little bit, but boy, you can't get a close above this purple moving average, which is the 10-day. That's a pretty strong move to the downside here. Overall, looks like it could be in a range. Intel just keeps getting shelled. Seem to have held 20 on a weekly basis here. Maybe it's worth looking for a potential bounce here. Okay. From the 2011 lows, though, it is below the 78.6, which suggests that it could go down and retest this little W pattern here. There's a little W right here. All right. Banks. Yeah, banks trying to hang on to dear life at the 200-day. They were holding up okay, but they kind of lost their relative strengthness, if that's even a word. They're still probably holding up better than the broad market, but still acting like crap. The Bank of America below the 50-day here. If it can't hold, should get a quick trip down to the 200-day. But if it can remount, watch this gap and the $10 number, of course. Northern Trust, still holding its 200-day moving average. JP Morgan, holding its 200-day. This is one, if the financials bounce, this is one I'd be watching. Citigroup, also another one I'd be watching. This one's hanging out pretty good. Right, little double top up here. But you got the pullback to the 50-day. All right, closed a little bit below it, but it's kind of hanging on. See if it can get a bounce from here. Broker-dealer, it's just not acting well. This hasn't been acting well since it tested and rejected the 200-day. Goldman, all right, coiled up here. So you got a possible eat one way or the other from here. Yeah, it's below the 50-day, so you think it's an easy drop down to the 200, and maybe it is. Okay, this is a bad line. It should be more flat than anything. There it is. But if it kicks up, you got the 50-day up here. So watch Goldman. Is Morgan below the 200-day. All right, cyclicals. Yeah, closed below the 200-day for the first time since August, or what is this, September, whatever it is, the end August, early September. Yeah, don't like seeing that, but gotta watch to see if that remounts. The basics, leading the way to the cyclicals, way below, have been below the 200-day for a couple of weeks now, a week and a half, whatever it is. Got some stocks like Caterpillar. Could be trying to form a hard bottom down here, but I mean, this kind of looks like a head and shoulders. It's not coming from a high low like up here, but this doesn't really look like a bullish pattern right now. John Deere, this could be a little head and shouldery up here as well. What do you got? You got there you go. Yeah, could be coiling as well. So maybe it's not a head and shoulders, but you do have this left shoulder, head, right shoulder kind of formation here. It's got to be respected. Let's see what we got. There we go. All right. Let's look at healthcare. Yeah, healthcare was just kind of drifting, and it wound up closing back below its moving averages. I don't really consider this bearish, but because I know it's below the 200, all the moving averages, and you'd say, oh, that's bearish. It's more just range bound than anything. Here's Aetna. Now Aetna getting a pretty nice correction off these highs down, whatever this is, 12% or 10.5%, 11%, whatever it is. So if this loses this support, this could get going. Seeing some more downside down there. Biotechs kind of sitting right here on the 200-day. All right. Right here. Okay. There you go. So this is one way or the other. And to me, looks like we could have a topping pattern in here. It's below this key consolidation here. So watch these biotechs. Okay, if the market, even if the market actually does get a bounce, if the biotechs don't join, then doesn't get going here, then this could be a nice group to watch on the downside. All right, what about the home builders? Home builders have been pretty strong. They're starting to pull back now. Okay, support here. Oops. The 140 area. A couple stocks. I can't even draw a freaking trend line. Toll got a bounce just before its 200-day there. One to watch. See if it fizzles out. Beezer, nice thrust through the 200-day. See what this does. If this kind of starts to stall out, this could resume some downside. Okay, GLD into the 15 now, kind of backing off here. Not in a rush to get cracked here though, so pay attention to this here. See if we can get over its 50. Silver looking the same. Oil, despite the conflicts in the Middle East, but of course, if certain countries get involved, this will change. And oil, you'll see oil definitely start to get a little bit more active. But you see here, it's just kind of chopping around. Here's the 20 EMA. You also got this trend line here to watch as potential resistance if it gets above that. If it loses 31, look for a gap fill and then a retest of these lows from back in June. Look at a couple of oil and oil-related stocks. Here's Exxon right at its 200-day, trying to hang on here. It's Conocophillips. Looks like a lift up here. Be watched for a short on like a reversal candle or a small little M pattern. All right, look at some of the glamour stocks, and I got a couple other stocks to look at as well. Okay, here's Apple. Boy, Apple really hooked some bears on Friday. Down all the way down to 505.75. Everybody's all happy. They're going to pin 500, and then it just turned and burned. Nice little pop into the end of the day. Now, what will this bounce bring? I mean, look how oversold this stock is. This is the definition of oversold and unloved, guys. I mean, it's down huge off of its highs. It's had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days straight stretched from its 10-day moving average. Very oversold here. So I would look for at least a bounce back to the 10-day. and perhaps even more. I mean, this is like pulling back the slingshot and going farther and farther and farther back. Now, of course, doesn't mean it has to bounce. But if the market does get in tune and Apple starts to bounce, I'd be watching at a minimum for this 10-day. And if it can get above that, then you got more to come, maybe up to the 20. Which, of course, these are coming down so fast, right? Right now it's 548.61, but you got to watch it on a live chart because it'll tick down. Monday these will be lower. All right, so just watch this one. Okay, Amazon, beautiful hold of the 200-day. See if this can get a bounce back up here to the 20 EMA. A little bit of a divergence down here. Not much, but a little bit of one. eBay, holding relatively okay, relatively speaking. I mean, it's way above its 200-day. It's below the other moving averages, but see if this can put a bounce in as well. Googleicious, beautiful test of the 200-day. I know technical analysis doesn't work, but somebody's watching it. I'm being sarcastic. Somebody's watching the charts, that's for sure. Okay, you got this little spinning top here. See if this one can get up to these moving averages. And look, we may get bounces back to these sharp moving averages that may just slam right into resistance and come right back down. All right, I don't, like I said when I went over the SPY, I think that we may get a bounce, but I'm not looking at, oh my goodness, this is the low of the. To me, it looks like we still may want to go a little bit lower. Or maybe a lot of it lower. I don't see the lot of it part yet, but here's RIM. It's trying to churn up. Watch the 200-day for resistance. Las Vegas Sands. Okay, getting a bounce up here. Watch the 20 EMA and then the 50. Win Resorts. Okay, had a pretty decent looking start to the day, but then rejected. A couple I want to show you. Visa is in a bull flag, really acting well here. Okay, really acting well. See if this can tag 150, which is not that far from here, right? Stock's already 142.71, but definitely one to pay attention to. MasterCard, not looking as nice, but Visa's definitely looking stronger. Amex, not looking so hot. All right, another one I wanted to go over is this RTIX. It's a cheapie. Okay, it's a cheapie in a coil here. So one for you to watch if it can break. See if it can get to these highs. Maybe even go to the $5 mark. Get back over the $5 mark. Okay, $5 is a key psychological level. What I like about these stocks, are, these patterns, not necessarily the stock itself, is that pretty early on when you're wrong, right? You don't have to sit here and, maybe it's going to, if it breaks this, well, then you're done. And then you want to pick it up at the 200-day, but that's a different trade. So, there's no reason to jump in until it confirms. And then once it confirms, you could pretty much manage it very aggressively. Okay. ODP was another one I've talked about. Got a lot of good feedback on this one. Pulled back here, went back up to above the $3 mark, but it's showing little signs of stalling here. It's got a MACD divergence here as well. So, what about Potash? Yeah, Potash headed for these lows. We talked about this a couple of weeks ago. It was, setting up, looked like it wanted to go lower prices, and here it goes, headed down here. So that's it. I mean, this video ran pretty long here. It's going to be 25 plus minutes, but just to recap, once again, I think there's a chance that we have the low end, but I don't think it's going to be for more than a small bounce. I think we're going to go lower. It may be a significant move lower, maybe down to the 78.6% retracement on the SPY. Maybe not. Maybe it just takes out the low off by a bit and diverges, or maybe it goes down to this June low. Okay, and then of course, we're not even taking into account the bigger picture fibs, right? Something like this, which if we do, okay, we see that June low sits at 50% of this big move off of the 2011 lows, and then we have 123, and then we have 116. So, yeah, if this starts going, there are levels to respect on the downside here. But as of right now, like I said in the beginning, still in an uptrend on the bigger picture. So that has to get some respect. Remember, the bigger the time frame, the more weight it carries, and the more weight it should carry in your analysis. Have a fantastic Thanksgiving. A lot of stuff to be thankful for. I'm thankful to everybody that watches my videos. I'm thankful to be running the live chat room now. I'm thankful to all the great feedback I get, even the people that don't like me. All right. So thank you very much for listening to me and dealing with this accent and dealing with my analysis, coming into the live chat room. If you haven't joined us yet, you really should. It's still free for yet a limited time. I mean, it looks like December we're going to go pay, or maybe the beginning of the year at this point. But once again, hope everybody has a wonderful holiday. Hope you're all spending it with people you love. And I will talk to you next week. Feel free to contact me with any questions or comments. Take care.